Hello traders and welcome to another video review. Today is Friday, February 18th, 2022. Let's take a look at the Forex calendar. National CPI was the key market release during the ASEAN session. The CPI was worse than expected. 0.5% was the actual reading, forecast was 0.6, and the previous reading was 0.8%, so it doesn't look like there is some kind of inflationary pressures in Japan. The same situation is with the all of the sub indices. During the London session, we got the retail sales data from the United Kingdom. 1.9% beats the expectations of 1.1%, and it's way better than minus 4% last month. The same situation is with the retail sales excluding the auto fuel. What else we have during the London session? Only the consumer price index in France and the current account of the Eurozone. During the New York session, we got data from Canada, retail sales, and the ADP non-farm employment change scheduled for at least 2:30, and new housing price index. From the US, we got existing home sales, leading index, and Barker and Hughes US rig count. We got two speeches from the FOMC members. John Williams and Larry Brainerd will give us a speech, and at the 4 o'clock we got one more data to be published. Consumer confidence from the Eurozone scheduled for release at 4 p.m. So it looks like it's a pretty busy day. However, all of the market movers have been already published, like for example the national CPI from Japan. So let's start with technical analysis of the Japanese yen. Daily time frame chart of the Japanese yen, this is exactly the US dollar to the Japanese yen, is showing us a breakout. This breakout occurred yesterday. It was below the level of 115.05 pips, which means the new low made even today 114.80 is still above this short-term trend line, right? But it's still at the same time out of this below this technical support. This looks like a kind of a weird pattern of it's not a triangle, it's not a pennant I've been talking about. Last time we got ABC to the upside, 100% market geometry reversal, and right now it looks like the US dollar to Japanese yen is going lower. Of course, the next technical support is seen around this level, 114.74. It might be a little bit higher. It might be actually 114.80. So we tested this technical support. Okay, this is the intraday technical support, but if we break below this level and below this trend line, then of course next target is 114.18, which is in the same time the low of the wave B. The key level, market with the blue arrow, is still seen at 113.50. So that's the situation on the US dollar to Japanese yen. Pretty much it looks like the bears wants to get more control over this market and push the RSI below the level of 50 for an extended period of time, which means of course we will go lower towards 113.50. We got some data from the British economy. Let's take a look at the British pound to the Japanese yen. The British pound to Japanese yen daily time frame chart doesn't look really concerned about the data. It keeps going up, and it's apparently following our pattern of ABC to the upside. This pattern has not been finished yet, and it looks like we got some sort of just maybe some sort of the triangle building right now between these levels of 156.37, 157.75. Due to the fact that we have the positive momentum here, kind of a strong momentum as well, we can expect that the breakout will will occur soon. Then we will test 157.75 and 158.19. This is the local high. If we break above those two levels out of this triangle, and then we close above the dashed line here, which is the line that separates this channel into two halves, then of course we can see that okay, we are developing the wave C to the upside with the target at 161.65. This is a few hundred pips to be gained for the British pound to Japanese yen, so it's really worth to keep an eye on this current pattern that is being developed. Of course, if there is no breakout to the upside, what's left? We either consolidate in this narrow zone. It seems like 156.6 is the level of a particular interest of bulls, because they keep buying up this level. So please keep an eye on this one. We don't need that level anymore, and of course only a sustained breakout below this level would open the road towards 154.89, and this is the key technical support here because of the proximity to the lower channel line as well. So please keep an eye on this level as well. Let's take a look at the crude oil. At the end, what is going on the oil? So we are still going up. We are still developing wave 5 on the daily time frame chart of the crude oil. However, this bearish engulfing pattern and this kind of a pin bar here is looking very worrying. However, there is still a chance for the market to rally, but it's way lower. What I'm seeing here, moreover, is it's a 5-wave pattern here. So we got wave 1, wave 2, wave 3, wave 4, and wave 5. It looks good. It looks completed, and that would mean, of course, we got this 5-wave pattern completed as well. The latest correction in wave 2 was 9.81%. So in order to do the overbalance, we need to break below the level of where is the 995 is around 86.43. So any breakout below the level, there you go, below this level would mean we got some sort of the overbalance, and that down move will no longer be a part of this 5-wave sequence. So the targets that we see here, 98.87, 101.57, will not be hit during this cycle to the upside, and most likely below 86.52 we will be doing the correction to the downside, right? So the corrective cycle will develop, targeting 84.10 or even 79.45. So that's the current situation on the crude oil. Last but not least, Bitcoin. So as you can see, the situation on the Bitcoin is in favor of bulls. Bears have nothing to say this time, and they are just they are not trying hard enough to break above this this zone here, which is the, of course, the supply zone, the key supply zone. 44,409, 45,429. This is the key supply zone, attacked three times rejected, and the reaction of the bulls is not strong enough to break above this level. And right now we might expect the market to go lower, and now I will show you where. This is the technical resistance, so let's just change the color to local technical resistance, 41,868. That would be another level of support. Let me just put it on the chart. There you go. This is the very narrow zone between 39,265, 39,400 and 540. Any breakout below this level would eventually opens the road towards somewhere towards the level of 36,155, and then there is only the swing low test possible located at 32,905. So that's the key long-term and mid-term technical support for Bitcoin. It still doesn't look good. It's still it looks ugly for bulls, to be honest. Right now this chart looks very, very ugly for bulls. It looks bearish, very much bearish. There is no bullish continuation here. 61% Fibonacci retracement, and the key supply zone, very strong zone for bulls. Too strong for them. They've been trying to break below this, they try to break above this level. However, the bearish activity pushed the prices lower. How much we have retraced during this recent push to the downside? Let's take a look. From the low to the high, I guess it will be around 38%. No more than 60. Let's say 50 or 38. There you go. And this is the current situation. 38% for 40,825 already touched, already violated. There is 50%, 39,320. That's the last result for bulls, very close to this technical support. If this level is violated, let me just put it on the there you go. If this level is violated, that's the key level, then we can forget about any up move in a Bitcoin. Most likely Bitcoin will see 32,905 in no time. That's everything for me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.